We're making predictions for 2016 and here are some of the burning issues. The Aussie dollar, it's been going one way for a couple of years now. Does 2016 see it go higher or lower?
Lower. I'd be amazed if it doesn't go lower. US interest rates to rise, ours to stay pretty steady, commodity complex coming off. 66 cents I'd have by the end of next year.
Goes lower next year, US rates going up, our rates probably falling over the next 12 months, sees our dollar go lower.
Give me a number.
60 cents.
Look, the Australian dollar is predominantly a commodity currency, and with commodities at a 16-year low, we're surprised it's where it is, to be honest. So I think a pretty easy call, lower in 2016, probably somewhere in the 60-65 cent range.
Should be lower. Our competitiveness isn't attractive enough yet to really turn the economy around. So it should be lower. Whether it goes lower or not, I just don't know.
Roughly the same. I think the consensus view has my concerns as well, but when a consensus is so strong that it is going lower, I think a lot of that's already priced in.
I think it goes higher. I think the consensus view is it goes lower, but as commodity prices bottom, the dollar gets a lift.
Okay, you got a prediction?
76 to 78 cents. Interest rates are at historical lows in Australia. They've been going down, down, down. Does it go lower in 2016 or do they head higher?
I think in 2016 they'll stay flat, but I actually reckon the next move up will be higher. I think we've seen the last of the interest rate cuts.
They definitely don't go down. They stay where they are or they edge higher late in the year.
I think we already would have seen it, so I'd say they're probably going to hold fire.
One more cut to come and it'll be responding to some weaker inflation data we see over the following 12 months, so another cut.
I'm with the consensus, down.
I think wines are down again. I think APRA's put in place the right framework for the banks to be able to not pass it along. So I think that the RBA will feel more confident about reducing rates from here.
What's the big thing the market has baked in already that they're going to get wrong in 2016?
I think people are calling for oil to fall lower. We think it actually goes higher in the second half of next year as global growth improves and rates go up in the US in particular.
That rate stay low forever because I think bond yields will start to tick up in 2016 even if interest rates don't immediately follow. And that's something that has been an 8-year trend which I think is going to start to reverse.
I think credit growth. I think they're worried about the property market and so they're saying that the credit will contract in the coming 12 months. I don't think that's the case. We only had one credit contraction in the last 40 years. So that's going to be positive for banks, property companies and financial services.
I think that they think that the mining index can't recover. I think that prices in commodities will bottom. They won't necessarily bounce, but that will mean that a lot of short positions will be unwound in the stocks and they go higher.
I think they're going to continue to try and pick the bottom of the mining companies too early, and it's going to get a lot worse before it gets better. In the iron ore space, for example, more iron ore is being produced even though the price is going down to meet interest expenses, and we've just seen the Saudis come out and say, look, our aggregate production cost is $15 a barrel, we're going to keep producing. So I think it's going to be worse before it gets better.
Banks are dividend stocks.